Good morning, Mr. Mkwena. Good morning, everybody.
Good morning, Mr. Chair. Mr. Chair, the second witness for the Treasury is Ms. Catherine Julia MacLeod. We are ready to proceed leading the evidence of the witness. Could the witness be please sworn in?
Yeah, that's in order.
Please state your full name for the record.
Catherine Julia MacLeod.
Do you have any objection to taking the prescribed oath?
Nope.
Do you consider the oath to be binding on your conscience?
I do.
Do you swear that the evidence that you will give will be the truth, the whole truth, and nothing but the truth? If so, please raise your right hand and say, "So help me God."
So help me God.
Mr. Chair, for the purpose of leading the evidence of Ms. MacLeod, we will be working and referring only on one bundle. We have taken the liberty of marking it Exhibit P1. It's in the blue folder next to you, Mr. Chair.
Okay.
We have marked
So,
it.
so the letter from the Director General is marked P1A.
Yes,
Is
and
that how it's supposed to be?
and the numbering continues, Mr. Chair, up until P1G. That will be the last page of the bundle before you.
The P1A is a letter from the DG, and then after that, P1B is a certain document and then P1C, and then P1D is written at the top, annexure supporting information, but seems to be
It's part of the
a
report, Mr. Chair.
continuation of the document.
Yes.
Is that
Even the
report
graphs that follow from
up to
P1E.
P1G?
Yes.
Is that, but where does the report start? Does it start
It starts
where
at
it says background?
At P1B, yes, Mr. Chair.
Okay, it doesn't start in the usual way that I'm used to, but okay, all right. So P1A is the letter from the DG to the Commission. P1B up to the end is the report on which the witness will be testifying.
Yes, Mr. Chair.
Okay, all right. Thank you. Can I have the spelling of the surname?
Sure.
Because I don't see it here.
Sure. It's M-A-C.
M-A-C.
C.
Capital or not capital?
L-E-O-D.
Is C capital or not capital?
No, the L is
Oh.
capital.
M-A-C,
Capital L,
yeah,
E-O-D.
E-O-D. Okay, thank you.
Thanks.
Yes, you may proceed, Mr. Mkwena.
Mr. Chair, the evidence of Ms. MacLeod will be corroborating the evidence of Mr. Mohojani. You would recall, Mr. Chair, that Mr. Mohojani, the DG of Treasury, did give evidence before the Chair, and there was certain information that was requested to compile for the Commission.
Yes.
And Ms. MacLeod is here to do exactly that.
Okay,
Her evidence does not implicate anyone.
yes.
He will be simply quantifying the economic ramifications of what we have now come to know as the Nannygate. Ms.
Okay,
MacLeod,
thank you.
on the 23rd of November 2018, Mr. Dondo Mkhajani, the Director General of Treasury, testified before this commission. Are you aware?
Yes.
Yes. And at the conclusion of his testimony, the chair gave him some homework to do. He was requested to provide information pertaining to the impact of what we now known as the Nannygate to the SA economy. Do you recall? That's why it is, yes. Would I be correct that your evidence today will be corroborating that evidence, and you are the person that has been nominated by Treasury to provide that quantification of the impact of the Nannygate?
I will be corroborating the impact of Nannygate on national debt.
Yes. Now, where are you currently employed?
At the National Treasury,
And then in what capacity?
I'm the Chief Director for Macroeconomic Policy.
And then in that capacity, what are your responsibilities and functions?
I'm responsible for providing policy advice to the Minister and DG in matters relating to macroeconomic policy. So that's got to do with monetary policy, savings and investment. We discuss a lot about what the financial market impacts are on South Africa's overall vulnerabilities and what policies we should be undertaking to try and manage those. And then we're also responsible for labor market policy advice to the Minister.
Yes. When did you join National Treasury?
In 2010.
In 2010. Now, from 2010, can you simply briefly just sketch for us your employment history within the department itself?
Sure. I was the director for demand analysis.
Well, maybe before you do that, what are your qualifications?
I hold a master's in economics from Pompeu Fabra. It's a university in Barcelona, Spain. I have my honors in economics from the University of Stellenbosch, and I completed my Bachelor of Economics at the University of Stellenbosch.
Okay, thank you.
That was going to be my next question, Ms. MacLeod, but can you then go back to the initial question just to contextualize your answers in relation to your employment history?
Sure. So I joined Treasury in 2010 as the Director for Demand Analysis. This position is responsible primarily for the monetary policy framework and what can be done to raise savings and investment in the country. There, I did a lot of work on inflation targeting, again, a lot of the work that we do is around what happens to financial markets and what the implications are for the fiscus and our macro policy framework, and working a lot with the Reserve Bank on issues relating to vulnerabilities in South
Ms.
Africa's
MacLeod,
growth path.
if you may be slowly in your evidence, I'm trying to capture some of the essence so that I can be able to clarify some of your evidence. You said that you are also working hand in glove with the Reserve Bank.
Well, National Treasury and the Reserve Bank obviously cooperate on matters relating to managing fiscal and monetary policy coordination to reduce the overall vulnerability of South Africa's economy and growth to financial market shocks or other areas.
Let me just check whether she's audible to everybody. Yeah, it looks like everyone can hear you. Okay, thank you.
Yes. Now, may I refer you to Exhibit P1? It's in a blue folder next to you.
Before that, you started at National Treasury in 2010, you said, is that right? Mm-hmm. Before that, had you worked in any other government department or company where you were also dealing with something similar to what you are dealing with at National Treasury?
I worked for I worked for a private asset management company for 4 years, where we focused on where I did economics and strategy, trying to understand what financial market implications would mean for investor portfolios. So we had pension funds and high net worth individuals who were advising how best to invest their money to protect their savings. And before that, I worked for a not-for-profit organization. I worked for a specific area within it that managed developing country central banks' asset management arm. So it helped them manage their bonds and did a lot of training with them to capacitate themselves to run that training, to run the fund management for themselves.
So, how many years would you say you have been exposed to dealing with the type of issues that you are going to talk to us about today?
16 years.
16 years.
Yes.
Thank you very much.
I have referred you to Exhibit P1. You'll see that that document runs from P1A up until P1G. If you can turn over just the page to P1B, could you please identify that document for us?
Yes, this is a note for the Zondo Commission on estimating the impact of Nannygate on government debt, which I compiled along with some colleagues from National Treasury.
Yes. Now, before we even deal with the contents of that report, may I preface your evidence by requesting you to deal with 2 issues. The first one, if you can elaborate on the context of the report itself, and secondly, if you may deal with what were the immediate impacts, of the Nannygate on the financial markets. If you can deal with them in 10, please.
Okay, great, thank you. So I think the DG already submitted in evidence about the impact of Nannygate on the economy as a whole. But the question before us was, what was the specific impact on government debt and borrowing? So government borrowing costs are determined by the difference between expenditure and revenue, right? In the report, in paragraph 2.6, we note that the eventual outcomes are the result of making decisions on what should happen to revenue, borrowing, and expenditure. But for the purposes of this report, to help the Commission understand what is the impact of Nannygate on long-term debt, we've held revenue and expenditure constant, okay? And we've just looked at what were we planning to borrow in the 2015 medium-term budget policy statement. So that was in October 2015, before Nannygate happened. And then it looks at what did we plan to borrow in 2016-17. And then after Nannygate happened, what were the costs on that borrowing? How much did that increase by? And that's the context for the report before us. We're all aware that Nannygate was on the 9th of December 2015, and immediately we saw financial market impacts. When we woke up the next day, on Friday, financial markets, on Thursday rather, financial markets were all over the place. So we saw the rand. It was previously 14.59 rand to the dollar on the 9th of December. That went to 15.27 rand against the dollar on the 10th of December, reaching 15.90 rand on the 11th of December against the dollar.
MacLeod, while you are still dealing with the impact on the rand, there is a document that you have also prepared. Mr. Chair, I beg leave to hand in the document that would demonstrate the witnesses' evidence even much more clearer than what she's now doing without us understanding the impact itself. I beg leave to hand in the document.
Yeah, no, that's fine. Thank you.
We have marked it to be P1H, in order to follow on the sequence of the last numbering of Annexure P1.
Okay, thank you.
Thank you very much for that.
I'm sure that when we look at this graph, it will illustrate better what you were conveying to the chairperson.
Yes.
Please
thank
take
you.
us through the, am I correct that the blue line that one sees running from top to the bottom, it indicate what we refer to as the Nannygate, a Nannygate event of the 9th, 12th, 2015.
Yes, that's correct.
Yes.
This chart here shows the rand against the dollar, so the number of rands that we must pay for every dollar. In this case, when the line goes up, it means the rand weakens because we have to pay more rands for any given dollar. What we saw from Nannygate, and which is perhaps not completely easy to appreciate on the scale of this graph, is that on the 11th of December, it reached 15 Rand 90, not the 10th of December. At the 10th of December, it reached 15 Rand 27. Obviously, there was trading happening during the day as well. I'm just quoting the close of business. Now, when you see, we didn't just have the currency moving sharply, we also saw the price of bonds fell sharply. So that's also included in the annexure and annexure P1E
Yes,
and P1F explain a little bit. It's possible to see some of the moves in financial markets. But if I could perhaps just say, you know, one of South Africa's most heavily traded bonds, the R186, the yield rose from 8.82% on the 9th of December to 9.87% on the 10th of December. That's a full percentage point higher. And again, with bonds, when the interest rate goes up, it means that when the yield goes up, it means the price has gone down. So this means that investors view our bonds as more risky. On the 11th of December, so 2 days after, the yield on the R186 was 10.38%. So even higher. Now, Minister Gadan has already given testimony to the Commission about the impact on equity markets, which fell sharply. And the banking sector has also given testimony in response to the need to sell assets in order to cover their capital adequacy ratios. So these were all the immediate impacts because the market was surprised at Nannygate. But as government, when we're trying to manage the impact of this on long-term debt, the short-term movement for a day or two or three can be managed to an extent because we think about what it is that we issue into the market. So government holds a certain amount of cash that we keep for emergency situations and to manage if we're not able to go to the market on a particular day. But what matters for the overall cost on government debt is when these financial market movements are sustained. And that's really what we have tried to look at in this report, is focus on what were the sustained impacts of financial market movements, because that will give us what the ultimate impact is on government debt.
Now, if I may refer you to your report on page P1B.
Yes.
You introduce your report by referring to the background. I am not going to bore you with paragraph 1.1 and 1.1 to 1.3, but of interest to me is paragraph 1.2, where you say that this act resulted in an increase in bond yields and a depreciation of currency when markets opened the next morning as investors repriced and risk associated with investing in South Africa. The change in ministers increased perception of the risk that South African government commitments to fiscal sustainability was weakening.
Yes.
Can you simplify that to us and elaborate on what you're saying in paragraph 1.2?
I think Mr. Fuzile gave detailed statements yesterday and previously, as have others, about what the change in the ministers might mean. The investors were also aware of what those what a change in ministers might mean for the fiscus. As Mr. Fuzile pointed out yesterday, National Treasury was attempting to caution and to stop certain projects from coming through that were fiscally unsustainable. And to the extent that a change in minister was seen as an erosion of National Treasury's attempts to stop unsustainable policies from being implemented, investors also saw that. And they were concerned that the change in ministers would weaken National Treasury's ability to fight those policies within cabinet.
Now, you are also mentioning another economic factor here by saying that as investors repriced the risk associated with investing in South Africa.
Yes.
It can also elucidate in that?
Sure. So whenever an investor buys a bond, they are assuming they'll get a certain amount of money back from the borrower every year in interest payments. And then when the loan comes due, then they'll expect to get a big lump sum at the end, okay? Investors are like banks when they look at you with a mortgage. They assess how likely is it that you're going to pay me back every year and ultimately pay back that lump sum. And similarly to banks, if you are borrowing from lots of different places, it raises a question about what is the affordability or your ability to pay back those loans. So to the extent that a change in minister means that the government may borrow more, it changes investors' perceptions of how willing or how able the government will be to pay back debt. Because if you're going to be borrowing lots, there's a question mark then about what the sustainability is. There's also a question mark, though, about whether or not, and this touches on DG Mokhadjane's initial inputs around the impact on growth. Investors are also worried to the extent that the change in minister signals a change in perceptions around what we are going to do to raise growth, which also affects government's ability to repay. So all of these factors come into their consideration, and they're negative in this instance.
Yes. And in paragraph 2 of your report, you begin now to give details in relation to the quantifying the impact of the Nannygate, and you do so in paragraph 2.1 and
Yes.
2.2.
Yes.
I know that you might have superficially touched on some of the things, but do you wish to take us through the other components of the paragraphs?
I think if I could just...
Well, before you do that, let's just go back to what you testified about a minute or so ago, the perceptions of the markets and the investors when there's a change of ministers. Would I be correct to say that ordinarily, if the investors and the markets know that the change of ministers is not the change of government, it's not the change of the ruling party, it's not the change of the president. The president is still the same president. The deputy president is still the same deputy president. The cabinet is still the same cabinet, except for 1 or 2 ministers who might have been dismissed. Would I be right to say it's likely that if they trust that the president, the cabinet, the executive, the government, and the ruling party, its policies have not changed. Their implementation is not going to change just because there is a change of one or two ministers. Then their perceptions are likely to reveal any concern. But if they think that the government, maybe the ruling party, maybe the executive, the cabinet, the president, the absence of one or two ministers might make a change in terms of implementation of policies, then they would be worried. I hope that what I'm asking is clear enough, but
Yes.
I'm just wondering why ordinarily they should have that concern in circumstances where one is not talking about a new government coming in and they don't know maybe what it will do. I ask that knowing that sometimes perceptions have got nothing to do with right or wrong. Yes.
Yeah, thank you, Chair. I think that Nannygate, ordinarily, as you point out, a change in finance minister shouldn't cause a big change if the path of government is well set and there's confidence in the ability of the minister. So that's absolutely correct. I think what made Nannygate slightly different was that there were concerns about the manner in which the minister was replaced, and the individual who was replacing him, as markets didn't know, weren't familiar with him, and it wasn't clear that there was a good reason for firing Minister Nene, and equally there were concerns that Minister Nene had been fired because of the timing of events mentioned by Mr. Fuzile yesterday. I think also the thing to bear in mind is that financial markets price according to risks. Nothing is certain until it's happened. So what you'll find is that certain events can stack up and start to change perceptions and increase. So we have this term tail risk. You know, if something has a small probability of going horribly wrong, but if that tail risk increases, even if it's only a 5-10% chance, financial asset prices will adjust to reflect that risk. Because if you are invested in a bond and you're hoping that that's going to look after a pension fund, you don't want the risk that, although it may be a small probability, that everything goes wrong. And so that's why you'll find that financial markets respond to perceptions rather than an actual event, because they're pricing in this cumulative risk. It's almost thinking about what are the relative risks associated with investing in a given asset.
In your consideration of the issues, I wonder whether you were able to look at other events in the past where maybe the markets had responded in a negative way to a change of ministers in the country. I seem to have read something recently, probably just in the media, that when Mr. Trevor Manuel was appointed as Minister of Finance, way back, I can't remember if it was 96 or 98, that there was some negative reaction from the markets. I have no idea. I suspect that it probably wasn't anything near what we saw when Minister Nene was dismissed. I think I also read something to the effect, and I may be wrong in this regard, that when Minister Gordon was also appointed Minister of Finance, there was some uneasiness in the markets. I'm almost sure that with regard to Mr. Gordon, it wasn't anything near when Mr. Nene was dismissed. So I just wonder whether you have had a chance to look at that and compare and see how big the difference was in of the, or is that something you not have had a chance to look at?
Chair, we haven't done that in this response. What we have tried to do, though, again, because it's not just necessarily about an individual, right? I think, as we point out in the documentation, Nannygate is a point, a very visible point in the state capture project. But it was reinforced by a series of events leading up to Nannygate and then also after it. And I think that it's not just about the minister's appointment, it's the context within which it occurred.
The context in which the dismissal happened caused the markets to react in the manner in which they reacted and with the intensity with which they did so.
Exactly. And then, Chair, what we've tried to do in the evidence is that we've tried to look at the longer-term impact on financial markets, as I mentioned, as a way of accepting that there were initial spikes in financial asset prices as a result of Nannygate. But if we took out that volatility and saw the differences in the levels, that's what we based the evidence on. So I think, if you look at that P1H chart with the rand-dollar exchange rate, financial asset prices are influenced by a range of factors, not just what's happening domestically from a political perspective, but also what's happening internationally. And you can see from the chart that it spikes a lot. And the point in time that you choose on the chart could have a very big impact on the estimate of what you're saying the effect of Nannygate would be. Because I could pick a very low number and compare it to a very high number,
Yes.
and then overstate the impact. So what we chose to do in the evidence was that we said what we would do is we would look at averages of what's happened to them. So we take away this short-term volatility in the daily prices. And what we've done is we've looked at what is the average of the rand-dollar exchange rate a month before Nannygate and the average of the rand-dollar exchange rate a month after, and compared them. And then we did that for a bunch of different periods in order to sort of smooth the overall financial market volatility.
Well, it may be that this is something you are still going to deal with, but let me say this and hear what your comments may be, because you have worked for a long time on these issues and markets, investors, and their reaction to different situations in a country. Without passing any judgment on Mr. Nene's replacement at the time, but it does seem to me that logically the reaction of the markets and the investors to the dismissal of Mr. Nene must, to a very large extent, have been influenced, among other things, by, maybe for lack of a better word, their lack of confidence in the replacement. Because I'm thinking that if Mr. Nene had been dismissed but had been replaced by, for example, Mr. Trevor Manuel, it's unlikely that the markets would have reacted in the way they do. And I'm saying Mr. Trevor Manuel because he had been Minister of Finance for a long time. Mm-hmm. He was quite popular, as far as I understand, with the markets and so on. So if Mr. Nene had been dismissed but had been replaced by somebody that the markets had confidence in, I seem to think it's unlikely that they would have reacted in the way they did.
Chair, that's likely, provided that the person, and this is not to say anything about Minister Manuel, but I think it's about the context in which Minister Nene was dismissed as well, because there were question marks about why he was dismissed, given the pressure on the fiscus from various projects that were being pushed from the then presidency. So if there were, and now that you've put a name to it, then it's a bit harder to say one way or the other. But if somebody else, not Minister van Rooyen, was put in that position, if that individual were associated with the state capture project in any way, then I think even if they were seen to be a good investor, I think there would be question marks raised about it.
Yeah, no, obviously the choice of the name that I've put in as a reason, because, and the issue of the context is important. What I'm thinking is that the markets might have would have had a certain perceptions about how Mr. Nene was doing his job, and it seems they were quite happy. And maybe the question of who he was replaced by made them think that it was somebody who was unlikely to continue to do what they believed was the right thing.
True.
And if the replacement was somebody that they believed would do the right thing, then they are unlikely to have, they would have been unlikely to react in the way that they did.
Yes, that's possible. I think what is important to note as well, though, is that after Nannygate, Minister Gordhan was reappointed as finance minister, and because of the continued pressure that Minister Gordhan remained under, which investors saw, there was still pressure on financial asset prices. So you can see again there with the rand-dollar exchange rate, there was still pressure because the state capture project, it had a very visible impact with Nannygate, but it was a risk that was building over time as the events that were described yesterday, for example.
Thank you very much, Mr. Mugwena.
Ms. MacLeod, am I correct that as part of your evidence, you have also provided the commission with some graphs and figures?
Yes.
Which we'll be dealing with in due course, where you are also referring to specific events that might have an impact on the economics of the country?
Yes.
Yes. We will deal with them in due course in order to properly contextualize your evidence in relation to the Nannygate. For now, may I refer you back to page P1B?
Yes.
And where you begin to quantify the impact of the Nannygate, you do so in paragraph 2.1 and 2.2. Could you please elaborate on those paragraphs?
Sure. So I think we've covered 2.1 in our discussions.
Yes.
Relating to 2.2, this is what we've tried to estimate. So economists always have two hands, and they say on the one hand this, and on the other hand that, and in a sense that's what we've presented for you here. Yes. We've given a range of potential impacts on bond yields of between 0.5...
Well, I can tell you lawyers also like on the one hand and on the other.
So what we have said is that we've estimated that the rand was about 10% weaker against the US dollar. And then we've presented a range of estimates for how much weaker bond yields were. So we've got 0.5% higher or 1 percentage point higher from the typical borrowing rate. So Chair, to explain how we got to these two numbers, if I could refer you to P1D, which is a table in the annexure, which just talks to changes in financial market prices.
Are you referring to table 1?
Table 1.
Yes.
And this is what I was talking about earlier, about looking at averages rather than a point in time. And what this table basically does is it says, okay, if we go to, if you look at the second column, we've got the generic 2-year bond yield for the South African government. And what we did was we took the average yield for a month before Nannygate and the average yield for a month after Nannygate, and we looked at what is the difference in that cost. And what became, it was about a percentage point, 1.03 percentage points different, okay? If we average 2 months before and after, it was 1.19 percentage points different, and so on. So that's the way that the table has been constructed. And you can see in that second column, that's the 2-year bond yield. So that's when government would pay back the money in 2 years, and then the 10-year bond yield, longer term. The third column there is the South African sovereign spread that's produced by JP Morgan. Now, what a spread is that it says, how much riskier would it be how much more expensive is it for the South African government to borrow compared to the US government? And this difference in those yields is what the spread is, okay? And that gives an indication of how risky investors perceive being in South Africa. So when the spread rises, people think that it's more risky investing in South Africa, and when it falls, they think it's becoming less risky relative to the US. So we've looked at that difference between us and the US, again, using the same methodology, and you can see that what's happened is that spread has basically increased by between either 0.8 percentage points or 1.10 percentage points.
And you're doing that with reference to a period before the Nannygate,
Yes.
and the period after the Nannygate, so that we can appreciate the risk factors as perceived by the international markets.
That's correct. And then you can see next to that, we have the emerging market spread. Now, why would I bother to put emerging markets if we're focusing on South Africa? Obviously, our bond prices are affected not just by what's happening domestically, but also what's happening globally. And South Africa is seen as a key emerging market. So when things go horribly wrong in Brazil and Turkey, sometimes it has an impact on our financial market prices. So we wanted to be sure that what we were picking up wasn't just global trends in South African prices. And so what you can see there is that there was an increase in emerging markets spreads over the same periods of Nannygate, much less than the South African spreads, though. Okay, and in essence, these are the basis of having this range. So if you were to subtract the emerging market spread from the South African spread, you can see that it's about 50 basis points, okay, 0.5 percentage points, sorry. And so that's informed the lower end of the estimate. And then we've also shown that because all of our bonds have basically increased by a full percentage point over the different time periods compared, that's why we've got the 1 percentage point increase in the cost of yields. On the final right-hand column, we've got the changes of the rand-dollar exchange rate. Okay, so a depreciation in the rand means that the rand is less valuable. It takes more rands to buy $1. And here, contrary to the bonds where you see a stabilization, the rand depreciated quite dramatically. If I can refer you again to P1H, the picture of the rand versus the dollar. The rand does...
It's a separate document, Mr. Chair.
Yes.
Thank you.
The rand weakens quite substantially through until January 2016, and then regains, and then you see the line coming down means that the rand is strengthening again from a point of weakness. But I think the important thing to note with the rand is that it is still much weaker than it was. So a year after Nannygate, the rand was a lot weaker than a year before Nannygate. Because Nannygate, yes, we've used it as a point in time, but you can also see the rand depreciation starting to pick up before Nannygate, because people were worried about the state capture project before Nannygate itself hit. It was just it was a point in time. And so this is why we've come up with a rand dollar depreciation rate of 10% for our estimates in terms of what we think has impacted on long-term government debt.
Yes. You also provide two scenarios in order to illustrate the impact of the Nannygate, and you do so in paragraph 2.3 and 2.4. Can you please explain to us those two scenarios?
So those two scenarios are the 0.5 percentage point and a 10% rand depreciation, and the 1 percentage point increase in government borrowing costs plus a 10% depreciation. I think those are reasonably conservative estimates in terms of the overall impact on Nannygate. So we present those results now. I don't know if you'd like me to go through the figures or if we want to go through. So in terms of the results, for the first scenario, we have the stock of debt rising by 26 billion rand compared to what we had projected in the 2015 MTBPS. And then what we find is that our overall debt service costs would be 3 billion rand higher in 2016-17 relative to projections in the MTBPS of 2015. And then under scenario 2, we have that the stock of debt would rise by 33 billion rand in 2016-17. Well, it would be higher, and then debt service costs would be about 5 billion rand higher as well.
That is post the Nannygate.
That is post Nannygate, yes. So what we've done is we've taken what we had originally projected in the 2015 MTBPS and seen what would that 0.5 percentage points higher in overall borrowing costs mean for the government, and a 10% weaker rand. If I could maybe just point out that, this is based on a funding model from National Treasury that we use to consider the impact of various risk factors on our bond issuance strategy. So before every MTBPS and budget, we plan where are we going to be able to issue government debt in the most cost-effective way for taxpayers, taking into account financial market movements. And so our funding model basically helps us think about different fiscal planning scenarios, because although we present in budget, we present a central case, and then we also present different scenarios, we have to figure out how would our borrowing strategy change and where are the pressure points. So that's the model we've used here. We use that model to communicate with ratings agencies and the IMF, and actually we've started to publish results from that model, for example, in the 2018 MTBPS. So just so that you know, there's some context to where we've come up with these numbers here. And so we've used that model given the assumptions that I've detailed to you on interest rates and currency moves.
And how does this impact, on the budget of the country when you have the rand taking a dive, as you have already illustrated, and taking how the stock debt would rise to those figures that you have already mentioned to the chair? How does that impact the budget itself?
So I think, the thing with government is that when you are borrowing, you're having to lock in those rates, right? So the problem is that we have increased the stock of debt, say, by 33 billion rand, okay? But that increase remains in your government debt stock until such point in time that you can pay down that debt, which basically means that you are bringing in more revenue than you're spending. As you're all aware, we have not run a budget surplus since the time of Nannygate. Our revenues have underperformed, and it's put pressure on our borrowing. So any increase in that government debt stock remains. So I think it's important to bear in mind that, especially for an issuer, when we increase risk perceptions of South Africa, it has real effects on the fiscus, which also means that it's money that we're not spending on overall social priorities. Instead, we wind up spending more on debt service costs.
Yes. And in paragraph 2.7, you further illustrate the point, and it appears to be actually talking to the issues that you did highlight earlier on in your evidence, but in far much more details and figures.
Yes, so in paragraph 2.7, I outline what actually we presented in the budget review 2016 for 2016-17 outcomes relative to what we had expected at the October MTBPS. And there you'll see that our actual debt service costs rose by 5 billion. They were higher by 5 billion between February 2016 and the MTBPS 2015, which means that debt service costs in 2016-17 were 11.4% of our total spend. In the MTBPS 2015, they were meant to be 10.9%. Now, the reason why we don't ascribe this simple difference between Budget Review 2016 and MTBPS 2015 to Nannygate alone is because there were, in terms of borrowing costs, is because there were lots of other decisions that had to be made about what are we going to do with revenue, what are we going to do with expenditure and total borrowing. So that 5 billion is a number of decisions. The budget deficit. Different to what you looked at on P18, this isn't the rand-dollar exchange rate written as 15 rand to the dollar, for example. What we've done is we've taken the average 2014 level of the rand and calculated that as 100, and then you can see how the rand has moved relative to that. And then what we've done here is we've done the same thing for an index of emerging market currencies. That's just to make, again, this point that what happened to emerging markets, you can see that although they weakened slightly in 2016 relative to their 2015 levels. It was nowhere near what happened to the rand.
Yes, but now help us to understand, be careful that you're talking to lawyers here. You have a red line and a greenish line that are on the bottom. What do they represent?
Sorry. The red line is the rand-dollar exchange rate, but represented as an index. And the gray line is the emerging market currency index, also represented as an index.
Yes, and the blue line that cut across, that would be
Nannygate.
the Nannygate event. And you've done that by taking the position before and the position after the Nannygate event.
Yeah, I think here this is just to illustrate the difference between exactly, it's a year before and a year after on either side of that blue line.
Now, the figure 2,
Yes.
what does it illustrate in relation to the bonds?
Sure. These are generic bond yields. So the government issues specific types of bonds, but these are generic, so that you can always compare what is a 2-year look like and a 10-year. The red line is the 10-year, and the gray line is the 2-year bond yield, a year before up to a year after Nannygate, which is represented by the blue line. And it should be clear to everybody that there's a shift change upwards although the prices recover from the initial spike, they remain well above what they were prior to Nannygate.
So the Nannygate effects were felt even beyond the 1-year period that you're talking about?
Yes, absolutely.
Yes.
Sorry.
You can go to P1F. You have the figure 3.
Okay,
If you can please explain it to us.
Sure. So bear with me on figure 3. I know it's got 5 lines, so this is violating the rule of how many lines you're supposed to put on any chart. But what it is it's the yield curve. So you'll see along the x-axis it says maturity, and then so it'll plot what is the yield for a given maturity of bond. Okay, and the shape of that is the yield curve. And what we've done here is we've shown that two months before Nannygate, which is the light gray line underneath, you can see that for borrowing across all different types of government bond instruments, the yields were much lower than for the very dark black line, which is Nannygate itself. You can see that 1 month after Nannygate, which is the red dotted line, yields were very, very high. They were almost a full percentage point or more higher, percentage and a half point higher than Nannygate. And then they came down somewhat 2 months after Nannygate. But we're still well above Nannygate and well above the times before.
And figure number 4?
Figure number 4 just puts the yield for the R186, which is a specific government bond, not a generic bond. That matures on the 21st of December 2026. And you can just see what's the point here is really that there are multiple shocks that affect financial asset prices, and political developments affect bond yields. And as you've mentioned, some can be positive as well as negative for financial asset prices. It depends on what the context is.
But concentrating on the Nannygate, what was the picture in relation to figure number 4?
This simply illustrates all of the changes that we've seen, but you can see as well that after Minister Gordhan was announced as finance minister, yields did come back down, which speaks to the chair's point about credibility, but they remain still above what they were before.
Now you come to certain conclusions in your report, and I have deliberately not dealt with them initially because I wanted to give the benefit of explaining this evidence within the context of the graphs that you've actually also referred to. May I refer you to Annexure P1C and take us through your conclusions on paragraph 3?
Sure. So as I've mentioned in the conclusions, political uncertainty has real costs. It can be difficult to isolate the exact impact of a given event, but in terms of what we've seen before us, Nannygate was a very visible point in the overall state capture project, but its impact was long-lasting because of subsequent events as well. We have just here given the impact of Nannygate on government borrowing costs. The other thing to bear in mind is that the ultimate incidence of these borrowing costs will depend on the spending and taxation choices of government. But ultimately, South African citizens and taxpayers are worse off as a result of these financial market movements, and ultimately they've been caused by political uncertainty. I think what we see is that econometric generally suggests that the cumulative impact of many events that raise political and economic uncertainty raise the cost of borrowing, they reduce investment, they reduce growth, and this together hampers our efforts to raise employment and fight inequality in the country.
Yes. Now, having regard to your evidence, you also refers to your report to the work of Hlachwayo and Saxgat.
Yes.
And in their book, if I'm correct, they say that that policy uncertainty it's unique in that it can be proactively managed, if not altogether avoided. Do you agree with that statement, and can you share with us in what manner could that be avoided?
I think policy uncertainty can be proactively managed. I think that efforts to engage with investors, to maintain fiscal transparency, to create the social compact, which the President Ramaphosa has been seeking to do, and to take demonstrable actions to resolve outstanding policy issues, or all manners in which policy uncertainty can be actively managed.
How can it be avoided?
So here, I think it can be. I think by actively managing that, it does reduce policy uncertainty. Can it be avoided in an absolute sense?
Let's take your evidence in relation to the Nannygate.
No, absolutely. I think that it can be managed. I don't believe nothing is ever 100% certain. But I think that the levels of uncertainty that we faced here, there was definitely room to reduce those dramatically, and that could have. And I believe that a large part of the political uncertainty market movements could have been avoided.
Yeah, and I'm posing this question having in mind the recommendations that were made at the end of this commission. If you can assist us, what are the consequences of policy uncertainty?
Look, as I've already highlighted, what I think the policy uncertainty, it has real costs, but there will always be some element of uncertainty in what we do, because we have changing priorities as a country. We may have changing leadership. So I don't think that it's possible to say that you want no policy, that it's an achievable goal to have absolute, complete policy certainty in every sphere. But that said, I think that decisively, it's possible to really minimize the impact that policy uncertainty has. So, for example, National Treasury has made a number of recommendations that we should follow through on policies that we say we're going to make, and we need to have those policies need to be designed after consultation with all relevant parties, and they need to take into account the overall policy environment. You need to have transparency about the policy-making process, and it's important as well to underline the certainty around the macroeconomic policy framework as well.
Yes. We have heard your evidence, and we appreciate, its context in relation to the illustrations that you've made. What would you say, having regard to your evidence in totality, to a comment that, if a rent was to fall, it can simply be picked up?
The sanitized version of what I would say to that is that it's easy to be glib about these sort of things, but financial market asset prices may recover eventually. But the thing is that between the point at which they've fallen and when they finally recover, government has to go out to the market and convince people to borrow, to lend us money, okay? And during that period of time, we have to pay more in order to convince them to lend money to us so that we can continue to fund our social spending programs. Between the time when the asset price is low and when you manage to pick it up at some point, you have pensioners who are retiring and cashing in their pension funds. And those pension funds will be of low value. Between the time that it falls and you pick it up again, you have banks having to meet their capital adequacy ratios, which means that they're having to sell other investments in order to meet those adequacy requirements. By them selling those other assets, it puts those assets under pressure as well. So I would say that that's the statement of somebody who neither appreciates the impact of financial asset prices on ordinary citizens, and certainly not on government borrowing.
Mr. Chair, that concludes the questions for this witness.
No, that's fine. Ms. MacLeod, thank you very much for coming to assist us with regard to these issues that had been raised with the DG before. It may or may not be that is the last time you are here. If there's a need, we'll ask you back to clarify some of the things, but so far, I think that I can release you.
Thank you.
Something that has got nothing to do with the substance of your evidence at P1F. The bottom column there, you and your team overlooked the fact that you, on the right-hand side, with regard to the 9th of October, you referred to Mr. Nene as simply Nhlanhla.
Yes, thank you.
It's not appropriate, and certainly not in a forum such as this. So would I ask you to arrange for an amended document, if possible, to replace that page? And the replacement can be made in every copy of the same document or bundle. Just check if you haven't been dispatched to somebody else in the same way throughout the document. I just picked up this one.
Thank you, Chair. It's actually just that the boxes have shortened in the thing, so it actually says and then also you'll see on the bottom one it says returns as, and then it's Minister of Finance, which is also being cut off, but we'll adjust those. So thank you for the spot.
Are you saying Nene appears somewhere other than where one expects it to appear?
It's just the box cut off the last 2 lines of text. So, but thank you for the spot, and we'll adjust it. Thank you.
It's Mr. Nhlanhla Nene.
Yes.
Okay. Thank you very much.
Thank you.
You are excused.
Thank you very much.
Thank you for coming. Thank you.
Mr. Chair, I'm told that it's technology. Nene was there, but it just got cut off when they were trying to do the structures.
Yeah, well, I think that's what she was.
We'll pick up the surname Nene somewhere. We'll make sure that it's there.
Just make sure that nothing appears to not give people proper respect. Okay, thank you. You are excused.
Mr. Chair, that concludes.
That's the only witness we had for today.
Yes, and tomorrow the ESCOM team will be proceeding with the leading of the evidence of matters related to ESCOM.
Yeah, okay. Okay, we are going to adjourn for today, and we are going to resume tomorrow. Before we adjourn, there is a need that this week I use the time from 3 o'clock upwards for another meeting, a meeting of the commission and the legal team and the investigators. Now, in order for us not to lose, not from 3 o'clock, I think from 2 o'clock, not to lose those 2 hours, we may have to start early one of the days, or more than one day, and or finish 1 hour or so later than 4, just to make sure that by the end of the week, we haven't lost any time in terms of the time that we must use for hearings. So, but tomorrow I think we could start at normal time, and then we can look at whether we should finish, we should continue beyond 4 up to 5, or whether we do that on Thursday and Friday only. So, but we can finalize tomorrow. So we adjourn now until tomorrow at 10 o'clock. We adjourn.